Hi guys, welcome back to the channel. I hope you're doing great. If you're new to the channel, of course be sure to subscribe to see more videos like this where we trade the markets the minimalist way by making simple analysis and using simple indicators. Today we are looking at Nifty 50 index, which is the major index on the Indian market, because even if I like to use the indicators on Forex and crypto mostly, the indicators work just as great on indexes and stocks as well. So what we are looking at today is a potentially buy opportunity, because let me draw a couple of lines for you. As you can see here, the price has been moving to the downside for quite some time, of course, but also recently, and it has formed 1 and 2 bottoms. At the same time though, the RSI that we have down here, the RSI Exhaustion, has been moving up. And this is the first situation that we want to check when we set the trade. So we want to see, the first rule is to see divergence between the price, in this case goes down, and the RSI, which in this case goes up. The second rule that we are looking for is to have the RSI exhausted. And in this case, the RSI is bearish exhausted. You see the red area here, and it's also red down here. So we have a divergence and we have exhaustion. The last rule, the third rule, is to have a bottom. And guess what? We have one here. So it was just confirmed at the close of the next candle. So at the close of this candle right here, the bottom of the previous candle was confirmed, so it is a natural bottom. But of course, to determine whether it's going to be a great opportunity or maybe a minor opportunity or an opportunity that you should skip, you need to combine this information with the others that we said before. So we have divergence between the price and the RSI, we have exhaustion, and we have a bottom. So we can confidently place our order, and in this case it's going to be a buy order around this level here. Regarding the stop loss, we can set it just below the lowest point, the most recent lowest point here, because unfortunately we don't have any indication down here, maybe a support. We don't have any previous price action. But actually, as you can see, the stop loss that we set here is pretty much the same level of the support level that we had back here. So this support level or this resistance up here are the ones that are indicated by the levels and zones, which is an indicator that we usually use for extra confirmation. By the way, if you want to test the indicators yourself, you find the link in the description down below. So the stop loss is going to be at this level, while the target, well, we can confidently place the target up here because we have a resistance and we have this major downtrend, which is very fast. And when you get this kind of movements to the downside or to the upside, you usually get retracements. So the price usually, it's not possible that a movement continues like this for an extended period of time. So the market will always retrace. And this is the time with the highest probability that the market will retrace. So if the market will retrace like we are expecting, so we are expecting that the price will move higher from this point, then the chances that it reaches this resistance level are very high. So this is our trade. It's going to be a 5.5x return, which is very great. So the risk reward is 5.5. Let's just wait and see how the trade plays out. A quick update, guys. So the price is moving higher. It started kind of within the stop loss area, but it kind of fast moved higher. and it actually, the levels and zones says that we have a strong support down here. So what I did was to move the stop loss to break even. So the stop loss is currently at this level here. In the worst case scenario, I will not lose any money, because if the price comes back down, the trade will be closed at this level. So I will indeed make a tiny bit of money. I will not lose any money, which is phenomenal. In the worst case scenario, I'm making money. In the best case scenario, I'm making a 4.5x return. This is the kind of consistency that you should have when you are trading. So trade after trade, you don't lose money. Maybe you lose one trade every, let's say, 10 trades. It's okay, it's perfectly okay. It happens because the market can do whatever it wants, whenever it wants. So you might have a great opportunity and then it ends up being a losing trade. But most of the times, so 9 times out of 10, you're making money and you're making great returns like 3x, 4x, 5x, or even more. So let's see how the price continues here. Just another quick update. So the market just made a gap here and it's moving higher and we are almost reaching the target. Of course, it's not over, so never get emotional. Keep the rationality. We are not done yet, so we are, let's say, 3/4 into the target. But we might end up losing this trade. So, well, actually losing not, but not getting to the target. So keep it calm and just wait for some time for the price to reach the target. I just would like to take the chance to comment on the situation with the RSI down here. So as you can see, the RSI is increasing and it is exhausted. Should you get concerned about this exhaustion? Not really, because it actually means that the price is moving up. It means that this price action, this up movement, is actually sustained by the RSI. So you should not get worried by this. It's a good sign, and it means that we should definitely reach our target, which is up here. So let's just wait a bit more and see if we get to the target. This is the time when most traders get emotional, because the price was almost to our target and then we got a top and the price is now moving lower. But guys, the analysis that we made back here is correct, because we had an upward movement and our objective of this level here is still valid. So the fact that we got a top here, it's something not very interesting. It's not something that you should be concerned of, because in the end we don't have any evidence from the RSI. This is an actual top. So this will be an actual top if, just like in the case that we used to start our trade, you see any divergence between the price and the price here and the RSI, and you also see exhaustion, and you also see maybe a second top. So this is not really something that concerns me. And moreover, as I said before, we are also at break-even, so we are enough safe. So we just need to be patient, and please don't get emotional. Always stay rational, because the worst thing a trader can do is to get emotional. It will end up breaking the trading account. It's 100% secure. So let's just wait a bit more and see how the price moves. If we get to the target, we get a 4.5x return. If it comes back down, then we are out without losing any money. Do you see what happened, guys? Do you see what happened? Our trade is over with a 4.5x return. Actually, it's a more than 4.5x return. But how many traders got out here? How many traders, beginner traders, got scared down here because they said, oh, I'm gonna lose my money, the price is going down, I prefer to close my trade and take maybe a 1x return because I mean, if the price falls lower, I'm gonna lose my money or I'm not gonna make any money, I prefer to close now. And they ended up missing out on this amazing trade. I mean, we got what we wanted. We got what we wanted. We reached the target and our return was 4.5x. This means that we, not there, we can lose the next 4.5 trade and still be profitable. Those traders who close the trade here with a 1x return, if they lose the next trade, then they are at 0. Their net result is 0. If we lose the next trade, our net result is 3.5, which is still phenomenal. So guys, never get emotional. When you do the analysis, if the analysis is simple, you can clearly see where the market is going. If you're using simple indicators, simple tools, just like the ones we are using here, then you can clearly see where the price will move. And when you take a decision to enter into a trade, to get involved, then don't get emotional. If you are scared to get emotional, then enter into the trade and forget about it. Set, of course, your stop loss, of course, your target, and then forget about the trade. And then once the trade is over, you just check your trading account, whether it's increased or decreased. But if you get emotional, please don't mess up with the trade, because the only time you can change, let's call the rules of engagement, so you change the trade while the trade is open, is only if you see any if you have any technical evidence that the underlying price movements have changed. So if you have the evidence on a technical point of view, because maybe you see a strong divergence, because you see a double top with exhaustion, because you see other evidence from your indicators that the price is not going where you want it to go, then you are allowed to modify your trade or close the trade if you believe so. This is at least what I do. But otherwise, just like in this case, if the price moves against my target, then I'm just okay. I just let it go and I'm patient. I don't get emotional and I just leave it alone. I mean, I just leave the trade open. I just wait for the price to decide whether to go down or up. But eventually, most of the times, you get to the target and you end up making money. So guys, I hope you liked the video. If you did, make sure to leave a like down below. Subscribe as well if you didn't already. And of course, if you have any questions, feel free to ask down below and I'll be happy to answer all of them. See you in the next one, of course.